Let's go ahead and get into the big topic today. I believe it was yesterday. I was reading about it, hearing about it, trying to catch up. I have the latest article from Forbes covering it. So it's written by Jack Kelly over at Forbes. And the title is President Joe Biden is going after Bitcoin and other cryptocurrencies and NFTs. So let's go ahead and hop into it. Keep the chat clean so, we can basically talk about this and not have to worry about, getting kicked off or anything like that. All right. So President Joe Biden is planning an executive action for federal agencies to regulate cryptocurrencies, digital assets, and Bitcoin, as he contends this is a matter of national security. It's always going to be this. The argument is always, we really care about you. It's for your own good. It's security. It's your safety. These are always the arguments used to basically take away the rights of an individual. At least historically, every time I've seen it. Granted, I don't know everything. I haven't been around for more than 35 years at this point, but it seems to be a trend, okay? He's striking at a time when the crypto sector, along with the stock market, is going through a tumultuous time, losing large amounts of value as the Federal Reserve said it will start raising interest rates to cool down inflation. His sights aren't only on Bitcoin. Regulators will look into stablecoins and NFTs. The Biden administration will also coordinate efforts with regulators and global leaders. Regulatory agencies such as the Securities Exchange Commission, SEC, and the Commodity Futures Trading Commission, International Revenue Service, and the Self-Regulation Financial Industry Regulatory Authority will likely coordinate their investigations. How many regulatory bodies do we really need in all this? Tons of it. It's insane how much money is dumped into these organizations. They also review whether or not tokens should be considered and registered as securities, which this one's going to be a big deal for sure. Usually, when there is concern over a sector in the financial industry, the regulatory bodies conduct extensive, invasive examinations and audits. They'll grill executives and key players of the platforms and brokerages that offer customers to buy, sell, and trade securities. Trading activities will be highly scrutinized to search for any patterns of potentially illegal or unethical behavior. Once again, what do? You got to demonize the usage of it. We're looking at this, because there might be some illegal activity in here. We need to see your encrypted emails because, there might be some illegal activity in there. And that's kind of how this goes. It's just fully expected, to be honest. While Bitcoin and other coins aren't yet considered securities, the regulators will dig into finding out if there are instances of money laundering, pump and dump schemes, shady business practices, wash sales, and market manipulations. That's all being done. Of course, we're aware of these things that happen, these pump and dump schemes. We're aware that money laundering was a thing, I think to a lesser extent, as in the early days. I'm sure there's still some of that going on. My understanding is 60% of that is still done in fiat, but there you go, or over 60% last I checked. So, maybe they need to get a regulatory, organization to look into the fiat manipulations, but also the market manipulation stuff. That's big industry. We're aware that does appear to play a part, and even articles like this and actions by the federal government to perform or release, information and scrutiny surrounding Bitcoin in and of itself could be considered market manipulation. So it looks like, yes, Biden, your cabinet, and everything else going on in the federal government is manipulating the market to a certain extent, even though that would probably be, not considered. So this would be a complete game changer if Biden's administration goes full throttle on this matter. An underlying unspoken reason for seemingly sudden interest by Biden may be all the money that is sloshing around in the crypto space. Biden's multi-trillion-dollar infrastructure and other plans are creating a huge amount of debt for the country. The digital asset world is now too big to fail, but it's not too big to extract a lot of money from it. We need money to do all this stuff that we want to do, so we're going to go ahead and pull it from, somewhere we consider that has a lot of money floating around in it. Cryptocurrency seems to be an untapped well of wealth, right? So, if regulators find irregularities, substantial fines and tax levies may be extracted from everyone involved in the crypto ecosystem. Yay, can't wait. The United States Treasury Department is already looking into what entities will be considered a crypto broker under the infrastructure bill Congress passed last year, and the reporting of any capital gains or losses to the IRS. This is going to be fun. Gary Gensler, the new appointed chairman of the SEC, the premier regulator of financial services firms, and Wall Street, has previously voiced his concerns over digital assets. Gensler took office when Wall Street had gone wild. During the pandemic, young novice investors fell in love with meme stocks and aggressively traded on Robinhood. Cryptocurrencies became all the rage, and a number of digital asset exchanges and platforms emerged to service the overwhelming demand for buying, selling, and trading Bitcoin, Dogecoin, Ethereum, and other cryptocurrencies. Yeah, everybody else that's normal figured out the game you're playing and were given tools to go ahead and participate. That's what happened. It's like what they're mad about is the fact that everybody now can participate and they can't just keep it all to themselves. That's how I feel about it. There was a boom in underwriting IPOs and SPACs. Questions arose over Chinese stocks listed on U.S. exchanges and the practice of payment for order flow. Investors complained of activities that suspiciously looked like pump and dump schemes and attempts at market manipulation. Do we need to state this again? Because this is the problem that we have. The general public gets involved in something, and some people fail and some people are successful, and the people that fail basically want a refund. And they want some regulatory service to basically be their net to catch them. And that's not what happens if the movement is supposed to be for financial independence, because with great responsibility, like financial independence, comes comes great responsibility. There you go. We get it. You guys know where I'm going with that. Spider-Man, right? And to an extent, I understand the frustration. I definitely call out things that I consider or that look like Ponzi schemes or pump and dumps. We'll talk about them, but that's on my research. If I make the decision to invest in something that is not going to get me profit and it doesn't, and I lose money, then that responsibility should be on the individual, in my humble opinion. Now, I know some people will disagree. There could be maybe a case for theft or fraud. That would be something different. But if we're just talking about getting in on a pump and dump and you miss the sell mark, there you go. I don't know. I feel like that's on you. Gensler shared his concern with CNBC, stating about the regulatory agency, "We are short-staffed." He added, "It might sound odd to say that about an agency with 4,400 remarkable, dedicated staff working remotely during this challenging pandemic. But that's 4 to 5% less than we had just 5 years ago." We know why there's less. You see the timeline, 4 to 5 years. Why is there less? This isn't rocket science. The lack of staffing and proliferation of new types of firms and products shouldn't be too surprising to industry insiders. In the aftermath of the financial crisis, compliance and regulations were made a top priority. The carnage created during this period created the need for greater oversight of the securities markets, bankers, brokers, and traders. Regulators cracked down on money laundering, insider trading, Ponzi schemes, and other types of abusive and violative practices. The need for risk, audit, legal, compliance, privacy, regulatory, and related professionals was insatiable. Compliance went from sleepy back office type of a job into one of the hottest and fastest growing professions on Wall Street. Things quickly changed when President Donald Trump took office. His administration made deregulation of the financial markets in corporate America a top priority. Trump contended that with fewer rules and regulations, remember what I said, it's quite obvious why they have 4 to 5% less 4 to 5 years ago or whatever. The animal spirits of companies will kick into gear. Companies unencumbered by onerous regulatory burdens would be set free to aggressively pursue bold business pursuits. Along with high taxes, regulations were viewed by Trump as an anathema to corporate growth and profits. He ordered that new rules will not be needed and existing ones should be scrutinized and thrown out, as he famously proclaimed, quote, "For every new rule, 2 must be revoked," end quote. Regulatory budgets were cut and regulatory personnel felt that they weren't appreciated for adequately supported. Many left to pursue other opportunities. Savvy Wall Street players noticed the shift in policy, and we've now seen the results. The SEC and other financial regulators, such as the Office of the Comptroller of the Currency Consumer Financial Protection Bureau, Commodity Futures Trading Commission, Federal Reserve Bank, and FINRA, F-I-N-R-A, a self-regulatory organization, are likely to request and receive funding from President Joe Biden's administration, especially as Senator Elizabeth Warren and Bernie Sanders have been outspoken on their dislike and distrust of Wall Street. Yeah, but what you guys don't get is that there's a bunch of people in the public that have figured this out and been given tools to fight themselves. We have the tools. Okay? So now all you're really doing by putting all the regulations into place is just basically taking it back and putting all the control back into large companies and large corporations that can basically participate in something the rest of the public can't. And when you go ahead and put all these regulations into place, what you potentially do is the exact opposite of what you say you're trying to do. This is why it doesn't work. Like, so frustrating. It's reasonable to believe that there will be an aggressive hiring campaign at the SEC and other regulatory agencies. Strict examinations, audits, and reviews of the securities and cryptocurrency industry will occur to keep the banks and financial institutions safe and out of the crosshairs of the regulatory bodies. To keep the banks and the financial institutions safe and out of the crosshairs of regulatory bodies. There may be a substantial increase in hiring of compliance, risk, audit, legal, and regulatory professionals. You know why? Because they can afford that. You know who can't afford it? The people that are trying to actually get into the system and use it just like everybody else has been able to do for the longest time. But you know what we can't do? We can't hire entire teams of compliance, risk, audit, legal, and regulatory professionals. So the chips shift back. That's what happens. You have the opposite effect of what we want. And definitely the opposite effect of the messaging. The messaging just wants the public to be fearful and be like, okay, daddy government, protect me. And then they'll use that to basically strip away any possibility you had to participate in this economic system at that level. I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.